Welcome to the Wall Street Crossover Show, brought to you by us, Tip TV, in conjunction with our sponsors, Admiral Markets. It gives me great pleasure, as always, to introduce Mr. Darren Sinden, market commentator at Admiral Markets. Darren, how the devil are you, sir?
Yep, good, thank you, Nick.
In terms of the weekend press, much to get your teeth into, so to speak?
Well, there were a couple of bits that one or two which we'll come to in a moment, but not a great deal. I think it's quite a quiet weekend story-wise, and actually quite a quiet start to the week.
Right. But in terms of the outlook for the rest of the week, quite a lot of things going on this week.
Yeah, the more we move through the week, the sort of more
busier it's going to get.
But it's probably peaking on Thursday, though there's still a few things to keep our interest in as we head into the long weekend as well.
Understood. Okay, well, if you're watching for the first time, if you want to recommend to us, if there's anything you want to see, any additions, we're always happy to take that on board. Let's go to the first slide today. Data released over the European session. What are the key items that have caught your attention?
Well, there wasn't really much in the way of actual natural European data, but there were a few interesting stories and points around. So first of all, the Federal Reserve's Charles Evans was speaking at a conference in Stockholm, and he gave a very dovish comment, really, saying that there was no compelling reason for rates to rise in the US in 2015, and that a zero rate policy they've got at the moment is not too easy, and inflation is too far from targets. So you read into that what you will, but as you're well aware, I don't believe that we will see a rate rise rather from the Fed in 2016. Mr. Evans seems to be backing that up. I'm sure other Fed members will have to take a different view. Yep. People must make what they will of it, but I think that's quite an eye-catching headline. And then a little earlier in the morning, we'd had industrial production figures from March from Japan, down minus 0.8 versus a minus 0.3 forecast, and a similar read in March. Just yet another negative data point in Japan. Factory orders were apparently better, but I just don't like the look of that. And then also staying with the Asian theme, in the absence of European data, we had new home sales data for April from China. Prices fell 6.3% year on year. There was a slower rate of decline if you look at the month-on-month data. Nonetheless, house prices, or property prices, were falling in 48 out of 70 cities in China. So,
interesting.
Yeah,
So in terms of this interest rate, this seems to be everybody's theme. Okay, when the markets are bored, they're always blaming the Federal Reserve and not understanding the interest rate cycle.
Well, I mean, I suppose it's a moving target to some extent, but the truth is the Fed is reluctant to tighten too early. It doesn't want to repeat the mistakes of 1937, 1938 when it made a false start, if you will. It started to raise rates and then had to reverse policy. What they found then was that cutting rates then didn't have any kind of positive effect. So they'd rather, perhaps, I suspect they'd rather move a little bit later, be a little bit behind the inflation curve, if you will, than go too early.
Understood. Okay, let's take a look at the FTSE 100 movers today.
Okay, well, just a couple here caught my eye. Fresnillo haven't had good news from a miner for a while. They reiterated their production guidance. The management talked up the cost controls and the cost cutting that they've used to keep the sort of margins in the business under check, and the management were upbeat about the prospects for the future. So the stock was up around 3.9% this morning. And then you asked me about the weekend press. Well, there was one story that stood out, and this was about Aveva, which is a software industrial controls group. Now, they were mentioned in the same breath as GE, Emerson or Schneider Electric, all seen as potential buyers for this stock, which is in a very attractive sector. Up 8.66%. No, it's not actually a FTSE stock. I should stress that it's a mid 250 with a market cap of about 1.3 billion pounds sterling. But it just took my eyes. A very interesting story, and presumably with three big names being touted, there's no smoke without fire.
Understood. Okay, let's take a look at M&A rumours and movers.
Okay, we'll stay with the mining theme here. The big story of the day really was that BHP Billiton spun off its aluminium, tin and lead mining business into a new vehicle called 32 South. It was a deal worth about $9 billion, and it was the largest listing in Australia since 1998. Priced at the low end of the range, however, an expectation had been somewhere of the order of 10 to 13 billion, but as I say, it came in below that at 9. Now, what's interesting here is that the assets that comprise this new vehicle, 32 South, had already been bid for by Mick Davis, who's got a new vehicle called X2. Now, he's the man that built up and ran Xstrata, but he left them when they were taken over by Glencore. The bid that he put in was rejected by BHP Billiton. Now the question here is, will they have a secondary market interest? He's got a $5.6 billion war chest, which is at his disposal. And the first day's trading, the shares of 32 South traded down as low as 170, closed at Aussie dollar 209. They were expected to trade in the range between 2 and 3 Aussie dollars pre the float. So if these shares start to drift, perhaps X2 will take a look at them in the secondary market if they couldn't get them off of BHP Billiton in the first instance.
Understood. Okay, let's take a look now at the US data points to keep an eye on today.
So today is a very slow day as far as US data is concerned, but we have got things to concentrate on later in the week. So I think the first thing to draw people's attention to will be the FOMC minutes, which will be released on Wednesday. As we've said at the outset of the show, expectations of an early rate rise are fading. Some people still clinging to the idea that July or September could be the point for it to kick off, but as we've already said, we don't believe that's the case. Yep. Then on Thursday, quite a lot of US data. We'll have the Philly Fed, flash PMI numbers, existing home sales, and leading indicators on top of the regular weekly jobless claims. So plenty of key data points there to give us clues about the health of the US economy. And then on Friday, we've got CPI, so inflation numbers for April, and then Janet Yellen is speaking away from the Federal Reserve. So, of course, as ever, the market will be poring over her every word to see what they can make of that.
Understood. OK, let's take a look at the US pre-market movers and specific chart points.
OK, well, as far as movers are concerned, I picked out 2 stocks in the pharmaceutical sector. Now, farmers and biotech have been really in the lead in terms of growth sectors for the last year, 18 months or so. And you might think that they should be losing a bit of momentum now, maybe investor appetite might be waning, but it seems not. So I picked on 2 stocks today that are emblematic of that. Juno Therapeutics, this is a biotech company. It hasn't actually got a product, a drug-in service, as it were, but has got an interesting pipeline in development. It posted a loss. But the loss was smaller than was anticipated, so it beat expectations. And the management was very upbeat about current trading and the future. So that's up 5.46% pre the market. JUNO, the ticker there. And then Synergy Pharma, ticker SGYP, they're up 15% pre-market. And it's not. It just shows you it's not always what you know, but who you know, because Paulson & Co., the giant US hedge fund, revealed in their regulatory filing, 13F as it's called, that they'd taken a 2.11 or 2.11% stake in the company, and that's been good enough to drive their shares up 15%. Quite a modest sized company, sort of $300-400 million, Synergy Pharma, but obviously one that people will be paying close attention to now after that famous name jumps in. And in terms of levels to watch today, for the Footsie, 69.45, that's the 50-day EMA for anyone who's interested in that, and 70.20 is the range there. For the DAX, 11,430 and 11,635. The S&P, 2100 even and 2125 are the levels there. The Dow, 18,154 to the downside, 18,290 upside range. And then looking at currencies, a little bit softer as far as euro dollar is concerned. So 113.70 is our new downside target, and 114.66 to the upside. Aussie dollar, 79.90 is our downside level, 80.30 is the level to look for a further move to the upside. And then in dollar yen, 119.42 plays 119.77. That's just tightened slightly from Friday's levels. And finally in cable, again, just giving a little bit of ground against the dollar, the pound, but 156.50 is our downside level, and we watch 157.30 close to the upside. Yeah.
Okay, Darren Sinden, market commentator, Admiral Markets. Thank you for that wrap. We'll be back same time tomorrow at 1 o'clock. Thank you. Have a good day.